Futures trading is an advanced and complex investment approach that allows traders to speculate on the future price of various assets. It plays a crucial role in the global financial landscape, enabling participants to manage risk, hedge against price fluctuations, and potentially earn significant profits. However, futures trading is not without its risks, and it requires a certain level of experience, expertise, and understanding to navigate successfully. This is why today's video is about futures trading for crypto investors. I will give you a quick introduction to it, and I will outline the main risks involved to help you decide if it's something you should be doing. So let's get into it. Welcome back to my channel. This is the Crypto Corner video podcast with myself, OJ. I've been a crypto investor since 2015, crypto trader and analyst since 2016, and I've had many hard-learned lessons in my crypto journey throughout the years. So I share with you everything that I know and everything that I do here on this channel. It's my crypto diary, so to speak. So let's talk about futures trading. First, of course, what is futures trading? At its core, futures trading involves buying or selling a standardized contract for a specific commodity or a crypto asset at a predetermined price to be fulfilled on a future date. This investment tool is utilized by commodities producers and consumers to protect themselves from the potential adverse effects of price fluctuations. These contracts are traded on the futures exchanges and define the quantity and quality of the underlying asset. Futures trading serves two primary purposes: hedging and trade speculation. Many commercial and institutional commodities producers and consumers engage in futures trading to mitigate the risks associated with price changes. They use futures contract as a safeguard against potential losses in case commodity prices swing unfavorably. On the other hand, sophisticated investors may also participate in futures trading with the goal of capitalizing on price fluctuations without ever owning the underlying asset. Such investors seek to profit from the changes in the value of futures contracts and can employ various strategies to achieve their objectives. All in all, this is a highly speculative type of trading, and it's definitely not for everyone. On one hand, you can make killer profits. We're talking 10x, 50x, 100x even, depending on your leverage. On the other hand, if you get it wrong, and especially if you go too heavy on any one trade, you can easily get liquidated, losing all of your money. And I've seen this happen way more often than you think. So before you jump into futures trading, make sure to practice on a dummy account. Some exchanges offer this, and I recommend that you practice at least for a few weeks or even months. That will be better. Alright, well, let's take a look at the benefits first. One of the most enticing aspects of futures trading is the leverage that it offers. By using a relatively small amount of capital, you can control a much larger value of assets. Consequently, potential profits can be multiplied if the market moves in your favor. However, it's crucial to recognize that leverage also amplifies the potential losses, making risk management essential. Second, lower trading costs. Compared to other financial markets, futures trading typically incurs much lower commissions and execution costs. This affordability can be an appealing factor for traders looking to manage their expenses and maximize returns. Also, futures markets operate for extended hours, providing investors with ample opportunities to engage in trading activities. This accessibility allows participants from different time zones to participate and react to market developments swiftly in real time. For many businesses involved in producing or consuming commodities or assets, futures trading offers a means of hedging against price volatility. By locking in a specific price through futures contracts, you can shield yourself from potential losses and ensure more stable financial planning. Let's not forget liquidity. The futures markets are known for their high liquidity, meaning that investors can easily buy and sell contracts without significantly affecting market prices. This liquidity enhances flexibility and ensures a seamless trading experience. And also fixed upfront trading costs. Unlike options, futures contracts do not suffer from time decay. Consequently, you can avoid the costs associated with rolling over options contracts, adding to the attractiveness of futures trading. Okay, now let's talk about the futures trading in crypto. There are many exchanges that offer some form of leverage trading for crypto, derivatives, futures, margin trading. You will find that most of the bigger exchanges, and even some of the smaller ones too, have this type of trading orders on their platforms. I use Bybit, BitGet, and Binance Futures, but if you go to CoinMarketCap or CoinGecko, you will find a lot more. CoinMarketCap has listed 59 of them, while CoinGecko has 71 entries. But all you need is one or two, really. So if you are going to trade futures, just pick one of the top 5, as they are arranged by open interest and trade volume, which means the top ones are the most used. I like the stats that CoinMarketCap provides, as you can see not only the trading volume and open interest for each, but also what are the fees that they charge and even the year that they were launched. So that already provides a lot more data points to take into account. But don't overlook the risks. Let's talk about the risks, because while futures trading can offer enticing benefits in traditional markets, venturing into the world of crypto futures trading comes with its own set of unique risks. Cryptocurrencies, known for their extreme price volatility, can amplify the potential gains, but also expose traders to significant losses. Here are some of the key risks that you have to take into account. Well, starting with volatility. Cryptocurrencies are notorious for their wild price swings. In the span of a few hours or even minutes, the value of a cryptocurrency can experience dramatic fluctuations. Such volatility can lead to big profits for experienced traders, but it can also wipe out entire investment portfolios for those unprepared for sudden market movements. Also, leverage amplifies losses. It can magnify potential profits, but it can also accentuate the losses. In crypto futures trading, using high leverage without a comprehensive risk management strategy can lead to significant account depletion, especially in volatile markets. And lack of regulation is another one. Unlike traditional financial markets, the crypto space is still relatively unregulated in many jurisdictions. This lack of oversight can expose traders to potential fraud, market manipulation, security breaches of cryptocurrency exchanges, all kinds of dangers. And speaking of market manipulation, yes, crypto markets, especially those with lower liquidity, are susceptible to market manipulation. Ill-intentioned actors with significant capital can influence prices and create artificial trends that lure inexperienced traders into making unwise decisions. Fake out, bear trap, bull traps, all kinds of traps. And that happens a lot in crypto, unfortunately. So take this into account. Another risk is the technical complexity. Cryptocurrencies and blockchain technology can be very complex to understand, especially for those who are new to the space, unfamiliar with the underlying technology. Misunderstanding the dynamics of a particular cryptocurrency or how a futures contract operates can lead to costly mistakes. And then there's the exchange risks. Some cryptocurrency exchanges may lack robust security measures, making them vulnerable to hacking attempts and theft of funds. Selecting a reputable and secure exchange is crucial, as losing access to your trading account can result in irrecoverable losses. So, given the high level of risk and complexity involved, crypto futures trading is not recommended for inexperienced traders. In fact, even as an experienced trader, I do not recommend futures to just anyone. I prefer spot trading any day over derivatives or NDCs. Here are the primary reasons why. Lack of experience. Successful futures trading, particularly in volatile cryptocurrency markets, demands a thorough understanding of technical analysis, risk management, and market behavior. Novice traders may lack the necessary experience to make informed decisions, leading to significant losses. Also, emotional decision-making is another one. The fast-paced nature of cryptocurrency markets can evoke very strong emotional responses, leading to impulsive decisions, and this is often a recipe for disaster. There is also high risk of losses. The combination of extreme volatility and leverage, big leverage, can quickly deplete your account. Even an experienced trader can suffer from that. So the risk of big losses, to me, outweighs the benefit of big gains. And of course, the lack of risk management is another big danger. Many people are not really having any risk management strategies at all. Neglecting risk management can lead to catastrophic losses, and it will, for sure. So all in all, crypto futures trading can be an alluring prospect for those seeking high returns and fast-paced markets. However, the risks involved, including extreme volatility, big leverage amplification, lack of regulation, technical complexity, make it an unsuitable choice for inexperienced traders. Before considering crypto futures trading, you should invest time and understand the intricacies of cryptocurrencies, trading strategies, risk management techniques. It's crucial to start with small investments and gradually build experience in less volatile markets before actually going into the complex world of futures trading. And here is a quick reminder to always keep your crypto safe. I hope you're using a cold wallet. I use several hardware wallets. My top preference right now is for this guy here. This is the Tangem wallet. It looks just like a credit card, and it's the best for day-to-day frequent use as it fits in my wallet with my other cards. And all I need to do is just tap it to my phone to approve transactions. Can't be any easier than that. This here is the one key touch. It's perfect for DeFi transactions and NFTs as well because it has a true color display. So it's ideal for that, and it's really compact and light. So also great for on the go. And for the long-term holdings, I use Keystone, Ledger, SecuX, Trezor, and this guy here, this is the Elipo Titan Mini. It's air-gapped, so it's perfectly protected against any online risks. I actually published this ebook guide to all of the crypto wallets where I break down the most popular ones, and you can easily choose the right one for you. So get it for free by scanning this QR code or with the link from the description below. Remember to always keep your crypto safe and own your private keys. To find out more, get the guide. All right, everyone. Well, this wraps up today's episode of Crypto Corner. Thanks for staying until the end of the video. I hope this information is helpful to you. Let me know in the comments if you have any questions or if you have any suggestions for other topics that you want me to cover. Also, make sure that you check out the links that I dropped in the description below, where I drop the links to all of the crypto services that I'm personally using and that I recommend to you. Exchanges, wallets, the top wallets also. If you're new to this channel, hit the subscribe button, hit the notification bell so you know when I'm posting a new video. I'm coming to you 3 times a week right now as we are still in this bear cycle. As soon as we go into the next bull cycle, I will be posting again every day of the week, 7 days. So definitely a lot more content coming your way, a lot of market analysis and reviews and deep dives into the top cryptocurrencies and also new cryptocurrencies that I'm researching and that I will be jumping in. I share all that with you here on this channel, so definitely it pays to be subscribed, and it is for free. All of my content, all of the information that I give you here is for free. So what are you waiting for? Just hit the subscribe, hit the notification bell, and while you're here, just pick another one of my videos and I'm gonna see you there.